Well, let's get to our first discussion. The Naira exchange to the dollar at 580 Naira at the close of last week, while the pound sterling traded for 780 Naira at the parallel market. The Naira has been falling steadily since the start of the month amid the lingering scarcity of foreign exchange in the country, despite the rise in foreign reserves. The Central Bank of Nigeria held its in July, stopped selling Forex to Burundishan operators on the ground that they defeat their purpose of existence through illegally dealing in wholesale trading of Forex beyond the statutory benchmark allowed by the law, directing businessmen and others to source Forex from commercial banks. Since the Apex Bank gave this directive, Naira has been on a free fall and accessing Forex has been difficult for firms as the Naira lost a margin of not less than 40 Naira to the dollar in just 2 months. Well, to break this down and, of course, make more sense of this, I have joining me the founder and chief executive officer of the Center for the Promotion of Private Enterprises, Dr. Muda Yusuf. You remember, immediate past DG of the LCCI. It's good to have you in the studio, Dr. Yusuf.
Thank you very much. My pleasure.
Yes, and a very good one there. Congratulations on the CPPE. Well, we'll talk about that maybe before we wrap up the show. But let's start with this very important issue. I am worried because some are even saying we might hit as much as 700, 800. Some even say 1,000 before the end of the year if care is not taken. Now, let's do an assessment of what's been happening. How did we get here with all of the efforts by all parties?
Well, it is a matter for great concern that we find ourselves in this situation. First, there are two major dimensions to this problem. There is the policy dimension and there is the structural dimension. Now, the structural dimension has to do with the capacity of the economy to generate foreign exchange. Because exchange rate is a price, and every price is largely determined by the forces of demand and supply. So if we had an economy that had the capacity to generate a lot more foreign exchange, then we would have been, helping the supply side of the foreign exchange equation. But unfortunately, because of the structural problems that we have, and when I say structural problems, I'm looking at things like infrastructure, basically. Things like logistics, sometimes even some very fundamental issues of policy, which is constraining the capacity of the economy, particularly those in the real sector of the economy, to be able to produce competitively and therefore be able to export. So we have a major structural challenge, which is affecting competitiveness, which is affecting productivity. And unless you are competitive, you have no business in international trade, because export is a global business. So if you don't have an economy, or if your enterprises are not able to produce competitively, then there's no way you can do and you can realize much from exports. So that is why, unfortunately, as we speak now, we still depend to the tune of close to 90% on crude oil exports, and of course to some extent gas for our export earnings, which is very, very unfortunate. The other angle, which has to do with policy, is the total policy framework around the foreign exchange market. Because even if we have structural issues, which is constraining the capacity to generate a lot of exports, which is also constraining the capacity for import substitution. Because if the structural situation is right, two things will happen. First, you'll be able to export. Secondly, you'll be able to substitute imports, so that you import less. So we have two. But the policy angle is that if you have a pricing mechanism which prices the exchange rate far below what we call the equilibrium rate, you create a subsidy environment. Because you are selling the product or you are selling the FX at a price that is far below the equilibrium rate. Therefore, you have created a huge, what you call premium or arbitrage opportunities. So part of the component of demand that we are experiencing in the foreign exchange market, it's not just only those who want to import raw materials, import equipment, or pay school fees. It is also about those who are in the market because they want to take advantage of the premium.
True.
And the premium is huge between the official window and the parallel market window. We are talking of a premium of close to 160 per dollar. You know? And the best practice in foreign exchange management is a premium of just about 5, maximum 10%. Here we are dealing with a premium of over 40%. So that's a fundamental policy shortcoming. So if you have that, you have all sorts of people scrambling for the foreign exchange. And invariably, because of the nature of our society, those who have the influence will be those who will get the foreign exchange, you know, far, you know, ahead of those who actually even need it, but who don't have the influence because of the premium that has been generated. So that has created a whole lot of distortion to the extent that those who genuinely need the foreign exchange, if they go to the official window, they'll be lucky if they get up to 20% of their demand for Forex. So where will they get the balance or the shortfall? So this is also causing a spillover into the parallel market. Unfortunately, the CBN said it doesn't recognize the parallel market, which I think is not right. All over the world, you have these multiple markets.
Yes, I was going there because yes. I said after all of this, the central bank came up after their meeting and said, no, we are not selling anymore to the BDC. Some say, yes, let the BDC source from autonomous sources. They will definitely get Forex. Some say there won't be any problem. And that is what we are here today. We are almost at 600 Naira to $1.
Yes, you see, when you are dealing with an economic problem of this nature, it is better to deal with the fundamentals. That are the causes of the problem. What we have seen so far is trying to tackle the symptoms rather than the causes. And if you want to solve a problem, if you keep tackling the symptoms rather than the causes, you will not make any progress. First, the issue was around the BDCs. There are a lot of malpractices, blah, blah, blah. They were shot out of the allocation. It was moved to the banks. Before it was moved to the bank, I think it was less than 500.
Yes, it was.
Now it's far, far above 500. Yes, again, another malpractices. The CBN has directed that names of defaulters should be published and all of that. That is being done. Whether that will solve the problem or not is another matter. You know? Then, at the time, there was the Aboki FX.
Yes.
That maybe, okay, Aboki FX was manipulated. Yeah. Aboki FX has shut his website. You know? Then, there was the issue about fintech. There are some players in the fintech space who are also manipulating Forex and so on. So, the thing is that if we don't deal with the fundamentals of pricing, because for me, this is basically a pricing problem.
It is.
Because we know what is it to manage subsidy in this environment. Because this is a subsidy management issue. Because when you begin to manage subsidy, it will lead you to rationing. And once you introduce rationing in the face of scarcity, you create a lot of corruption risk, a lot of transparency problems, which will be happening along the entire chain. We have seen our experience with subsidy management with fertilizer. Those who are old enough, we remember how bad the situation was. When trailer loads of fertilizers were disappearing between the ports, Apapa port, and their destinations in various states. At that point, the government decided that, okay, they should deploy the military to accompany the trucks. That was done. Both the trucks and the military personnel were also disappearing. That shows how bad a subsidy management problem can be in this environment. We are facing the same thing with fuel subsidy.
Yes.
You just realize some figures now, almost close to $1 trillion.
Yes. So as crude continues to appreciate, we're supposed to be happy that we're getting more money.
Yes.
But we are paying more for PMS
exactly.
because we keep importing.
Yes. So it's a subsidy management problem. Now we are talking of something close to 1 trillion naira in 8 months in subsidy. It is not a popular thing to say in economic management when you talk about, okay, this subsidy is a problem because the citizens feel that, well, and rightly so, that this is our own benefit. Why should we be paying more?
Yeah.
But it's costing the economy a lot, not just in the absolute terms, but also in the sense of the opportunity cost. And when I say opportunity cost, what I mean is that what are the alternatives that will have been, this money will have been used for? We are talking about quality of roads, we are talking about railways, we are talking about security. All of these things need financing. So if you are now spending close to 1 trillion and it's going to get far above 1 trillion by the end of the year.
Yes.
You'll be talking about something close to 2 trillion. So that is the problem. So what I'm trying to say is that it is better, first,
okay,
for the CBN to recognize the reality of the problem. That we cannot sit and begin to watch these parallel market rates continue to depreciate the way it is depreciating. Because it is hurting the economy. If you talk to any investor today, the operating exchange rate is not 412. It's not 413, as the CBN is claiming. The operating exchange rate is far above 500. And that is affecting production costs.
Yes.
It's affecting operating costs. It's affecting business sustainability. It's affecting the margins that people are making. It's affecting the capacity to create jobs. It's also generally affecting the confidence of investors. Because the inflationary effect is phenomenal.
Yes, it is. Yes, it is.
I mean, we have seen prices, quite a number of prices have doubled. Some have tripled. So when we talk about inflation at 17.01% and all of that, the reality of prices in the market of basic things is far ahead of that. We have seen prices increase in the last 1 year, 100%, 150%, 200%.
So are we saying that there was a time there was an argument of floating the Naira, to allow traders determine the rate, talking about, of course, demand and supply to control that market? Are you still thinking that can help stabilize this issue? Sincerely,
I believe that it is better to allow a market framework to operate in the foreign exchange market. It's far, far better than this administrative allocation of foreign exchange. This allocation of foreign exchange administratively is fraught with all sorts of problems. And how many fires will the CBN fight? How many defaulters will you chase? Because we have created an environment where so many people who don't have any legitimate need for Forex are already in the space. And some of them are more connected than those who actually need this foreign exchange. So a market framework will be much better. And nothing is absolute. Even if you have a market framework, it doesn't mean that it has to be absolutely so. There may be a few instances of what we call market failure. Market cannot solve all problems. But substantially, it has been recognized that it is an efficient mechanism in the allocation of resources. And we need to recognize that. So if you have a market-driven framework, it will do a number of things. First, it will moderate demand in the official window. because it will reduce this premium.
Yes.
Drastically. So those who are in that market, because of the premium or arbitrage, we will be able to remove them.
True.
Secondly, it will also support the capacity of government to generate more revenue. This is government fund, although it's coming from CBN. Rather than sell FX at 412, why not sell it at 450, at 480? Do you know what that will do to revenue that is coming from the CBN to the Federation account? And in terms of even reducing the fiscal deficit. So there's a revenue effect. There's an effect in terms of removing all this arbitrage, there's also that effect. Then on the supply side, we have challenges of supply, not only because we have issues with oil price or oil output, but also because all these other windows through which Forex can come in, the current policy regime of pricing is discouraging supply from coming in through those windows. Now, if you talk to exporters, they are not happy that the current policy is imposing an exchange rate of 412 on them, because they believe that it is a disincentive for them. If they have earned their dollars, they should be free to negotiate with the banks at whatever rate they want to sell it. Because if there is any benefit of a depreciating currency, the benefit is for exporters. In fact, we have seen some environments where the government deliberately devalue currency to stimulate exports. So the silver lining in all of this is the fact that it's a great incentive for exports. But the way the exporters can reap the full benefit is for the exporters to have free access to their foreign exchange and to be able to exchange it at whatever the market rate is. That will help supply. If supply increases, the exchange rate will drop. Then we have people who want to import capital, foreign direct investors. Again, if we continue to insist that the foreign direct investors should exchange their inflows at 412, they won't bring it. Look at the data of capital importation. More so when they know the kind of experience that some people who have brought in capital, the kind of experience they are facing in terms of having to exit from the economy, because we have a huge backlog of foreign investors that are struggling to take their money out.
Back.
Now we also have portfolio inflows. This is a good time for a lot of portfolio inflows to come in, and that will have a significant impact on our capital market. But again, if we continue to insist that it has to be at this 412, those ones also will not come. The only slight modification that the CBN has done, which I commend them for, is the one around the diaspora.
Yeah.
The diaspora guys have full access. They can take their dollar, they can exchange it. That is good. We need to make sure that that is replicated across all the other windows of inflows of foreign exchange, including oil companies, including even the embassies, including even the some of the MDAs that import foreign exchange or that generate foreign exchange, like NIMASA, like NPA. You know, these guys also generate a lot of foreign exchange. So that is the beauty of a liberalized market. Okay. If there are instances of market failure, we can deal with that. If, for instance, we need to import maybe security equipment, we know what we are facing with security. There could be a direct dollar allocation to them, because that's a special need.
Yeah.
There are ways to deal with issues of market failure when it comes to this. But more importantly, is to allow the market to function. If the market is allowed to function, it is even less headache, even for the central bank. You will not be chasing people all over the place. What we have now is constituting a major distraction to the central bank. So I believe that to a large extent, a market-based approach will help. Of course, we have structural issues. Structural issues are medium to long-term things in terms of the solution. Look at how much we are spending on the importation of petroleum products. We are talking about billions of dollars. And yet we have 4 refineries. That's a structural problem.
Yeah. Because
we don't have the environment to produce these petroleum products. So if you can deal with that, that will also reduce the pressure. If you can create a much better environment for manufacturing to be more competitive, for productivity to increase, that will also help to show up our exports, and it will also help to reduce the import, because we'll be able to scale up what you call import substitution. So these are some of the things that the structural component of these things can bring about in terms of solving the problem. So in terms of solution, there's a policy solution, that's a structural solution. Those are the things. But the policy solution is a low-hanging fruit. It's something that you can quickly deploy. Otherwise, we'll just be running around in circles, and the situation will continue to degenerate. And this is not good for investors' confidence. At all. It's creating a whole lot of uncertainty, even up to the level of even the informal sector. All these small traders in the market, they will tell you that each day they get to the market, they have to contact suppliers and everybody to know that the price of yesterday is still valid for today. That is the degree of uncertainty that this volatility has caused. And we cannot allow this economy to continue this way.
It's a very beautiful way to live it. It's always interesting talking to you. Founder, CEO, Center for Promotion of Private Enterprise. In just 1 minute, if you can do that, tell us what we intend to achieve with this.
Well, the Center for the Promotion of Private Enterprise, CPP, is about supporting private sector initiatives.
Of course.
It's about also collaborating and complementing the efforts of the organized private sector. Because we believe that the way out of all of this problem is to ensure that we position the private sector properly. If we create the right environment for the private sector, a lot of these problems will be solved. But we need a right kind of platform, quality engagement, evidence-based research to be able to make these things happen. So that is what the CPP is all about. All
right, then, Dr. Muda Yusuf, you heard it live from there. He's the founder and chief executive officer of the Center for Promotion of Private Enterprise, former immediate past DG of the Lagos Chamber of Commerce and Industry. Thank you very much. It's really good to see you.
Thank you.
All right, then.